All right, hello, welcome traders. It's Friday, December 6th, 2024. We are wrapping up the end of this week, a really good week for us from a trading standpoint. We could get into that. I'm going to share some of the new trades that I put on today. Took a ton of trades off. A lot of our bond trades all came off as great winners today. So bonds have been probably the best trade of the month. Believe it or not, actually, the best trade probably of the last 2 months now. Even though they looked sketchy a couple weeks ago, bonds certainly we held in there. We worked our plan. All turned out really well on bonds. So we've made a ton of money on bonds. So we're doing really well on both the trading account and the investing account. We cover both with you today. So stick around. I'm going to share what's going on in those accounts, and I'm going to share what trades I put on today. But let's take a quick look at the markets. I'm going to share that with you. Take a look at the overall market, see what happened. So we did see that the uh, ES, the E-mini futures, 6111 popping up there today and yesterday, new all-time highs in the market. So today, was it today? Yeah, today hit a new all-time high, beating yesterday's high by 4 points on the ES. So really good stuff. The markets are strong. Okay, really strong. However, I'm going to continue to go through what I've been going through for uh, a little bit of time now, and that is just telling you that we've got a rising wedge, which is fine until you break the support of that, and then it's technically a decent bullish, or I'm sorry, bearish trade. So we'll continue to watch what's going on here, but we want to make sure that things are not getting a little out of hand. But we have also watched that fear and greed index just ticking down. In fact, let me share that with you. We've moved from a high of 67 a week ago, solidly in the greed camp, all the way down to the neutral camp. So the market's hitting new highs, but the fear and greed index is not. Okay, it's staying really in that neutral zone. So we're not seeing the greed or extreme greed readings that we saw a week ago. We've moved into neutral now. Certainly very interesting as we go through that. Let's take a quick look at the. I want to look at CVol. Let's take a look at the Fed Watch tool. What's the Fed looking like they're going to do? And the Fed here has now an 87% chance on the Fed here. We have now an 87% chance of a 25 basis point cut. So that continues to go up. If we look at how that compares, that has continued to move up. A day ago, we were at 71. A week ago, we were down at 66. So the probability is now 87% on the 18th of December, okay, which is 12 days from now. We have a 87% chance that we're going to see a 25 basis point cut from the Fed. And then what happened today? Why am I not finding what I want? Oh, it's because I had it up here on the dashboard. And then today we did have some data coming out. So what happened with unemployment was unemployment actually, or I'm sorry, employment rose $50,000 versus an estimate of 24. The unemployment rate, though, actually increased from 66 was the forecast, and increased from 65 to 6.8%. So estimates for 6.6 came in at 6.8. So you're seeing the unemployment rate starting to tick up a bit, increase from last reading and beat estimates. Average hourly earnings rose a tad. Non-farm employment rose. So we expected a gain, and we got a little bit bigger gain. So you've got increasing employment and the unemployment rate also rising. Pretty bizarre stuff. And that, oh, I'm sorry, that was Canada. I'm sorry. Looked at the wrong thing. The unemployment rate, though, it did tick up to 4.2. I don't know, 6.8 should have registered wrong. So my bad there. But yeah, 4.2%. So again, unemployment did tick up, okay, fractionally from 4.1 to 4.2%, and employment ticked up. So overall, we're seeing the economy's still strong, but unemployment there, giving the Fed a little bit better chance that maybe they're going to cut, and we see that reflected in the Fed rate. All right, so back to the markets here, and we are getting very, very close to an overbought situation, but we're not there yet. We're not at the top, but we are getting close, at least on the daily, to the top of the Bollinger Bands. We're not quite there, but we're close on the weekly to the top of the Bollinger Band. This is not the best time to be getting long a lot of positions, but I think it's a great time to be trading. Right now, we're trading the momentum. The momentum's rising. RSI is rising on the weekly and the daily, and you got to take advantage of it. And that's what we've been doing. But we're still cautious. I'm not going all in. I'm just holding on to what we got. We are taking gains off of the tables as we hit them. In fact, we had a 120-day naked put on ES futures come off today, and I popped another one right back on. So that is a campaign trade that I always have on. I'm always selling a naked put out 120 days on the ES futures. That happens every single time one comes off. Another one goes right back on. We're going to keep running the campaign trades, but I'm holding off on any new discretionary trades. But we're seeing other things winning. Bonds rising solidly today. Let's just jump right to bonds. Bonds having a good day. This has been a heck of a run on bonds since the 22nd of November. We had rolled, and I had shown my account. We booked the realized losses on the roll when we closed the trade, put those on, and now just a couple weeks later, they've all come off. So I am now out of all but one bond trade. All of the naked puts off, took wins on all of them, even took wins on some of the naked calls there too. So we closed all of it out today. We're back to a fresh start. We're not having to worry about the roll, but we were strong in our conviction. We followed our trade plan, which was either to take the stop or roll if we still felt that the trade was valid, which I did. We rolled out. We were selling naked calls against our naked puts the entire time that the market was trending down anyway. We were booking income, 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 income. And then when the market reversed and rolled back up, we actually were able to take the naked puts off for nice wins today. So overall, fantastic trade. Really generated some great income for us. So all in all, those are in good shape. I am sitting on a bond strangle right now, and that is the only bond trade on, but I will get more on next week now that we have a lot of buying power freed up. We also had today an oil trade come off. So we had an oil strangle come off today. That was in fact, let me see if I can take a look here. That oil strangle was a 50% winner in only 18 days. So again, got the 112s, we got our strangles, and then we have a few other spec trades that are running. But again, sticking to the plan. Okay, we've made some modifications, but for the most part, the plan is absolutely working. But yeah, when you're able to take a oil strangle off for a 50% winner in 18 days, that was great. But even better, we had a copper strangle on. Take a look at copper. Had a copper strangle on, and that copper strangle came off in 9 days. I took it off at 44%. There was no reason to wait for 50% and wait another month or so to potentially get that. If you hit 44% in 9 days on a 90 DTE trade, taking it off for a winner. So 44% winner in 9 days, almost 10% return on margin. And the oil strangle was a 15% return on margin in 18 days. So again, good wins there, along with that ES naked put, which was a 40% winner in just 28 days, 11% return on margin. So really, really good stuff. Big week for us as far as realized gains and Netlick gains as well. So that was a good sign. If we take a look at oil, oil had dropped today. We're still at the very bottom end of this value range. So we're at the end of this range. If we break down below here, we have some support. We've tested this support a number of times. We'll see if we bounce or if we break that. If not, we're in good shape. Our oil trades that we have on right now are 2 112 trades. The great thing about that is our Our naked puts are at 54 and 56, so we're well out of this area on these. And then you've also got uh, the put debit spreads, which are right now both positive and generating cash flow. All right. So let's keep going here and let's move to the next stock to take a look at. All right, and that is gold. So let's take a quick look at gold and where we are. We've been looking at gold for a potential strangle setup. It's been a beautiful strangle setup. Had we entered it earlier in the week, we did flag that to the members. We did tell people gold was a great strangle setup, along with bonds, along with copper. Those were our three trades this week in the trading account that I thought were good plays. Did not get the gold strangle on. It's still setting up perfectly for that right now. But gold just kind of sitting right there in the middle. And then silver has been doing something pretty similar. It's just kind of meandering sideways right now. The weekly looks a bit bearish. The daily looks a bit bullish. The RSIs are sitting dead in the middle. It's right in the middle of its Bollinger Bands. It's right in the middle of its ATR bands. So we did put on a strangle in silver today. And also in the investment account, we did put on a poor man's covered call in silver as well. So I like where silver is. It's been moving up nicely. Great pullback to the trend line as well as the 21-day moving average on the weekly. So I think this is a nice bullish setup on this pullback here. So we wanted to get a poor man's covered call. That's a good opportunity. Anytime you can get in at or below the 21-day moving average on the weekly, I think that's a good opportunity on the poor man's covered call side. So we did that and sold the covered call on silver. All right, so there's where we are on a few of these trades. Let's take a quick look too. The Aussie dollar, we're doing nothing on here. We actually have a 112 trade still working, and we sold the 0.6, which is way down here. So we would, we're heading lower, but we would really have to break some more of these support levels here. We breaking one today, the one support level breaking today. The uptrend line we've already broken. So we're definitely breaking some levels here. We're at the bottom of the Bollinger Band on the weekly and the daily. I think that's not bad, but essentially this trade is actually up for us because we are profiting nicely on the put debit spread part here, and even the naked puts are still decaying. They're not in bad shape. They were actually up today, so we actually made some gains on the naked puts today. Okay, because you saw things moving, and then we also made gains on the put debit spreads so far. So this trade is up nicely so far. We'll keep that trade going. And then RTY, we're in a holding pattern here. Things are just it's pulling back decently on the daily after a new higher high. Maybe we'll see a higher low in here. I think that'll give us an opportunity. But we're at the top of the Bollinger Band, which to me, I don't want to be adding trades at the top of the band. Nothing in ES, top of the band, and nothing in RTY, and nothing on the NASDAQ. All at the top of the bands. Makes no sense to go with anything longer term here. I think you just trade through these, and I'm just letting our trades work. We've got great trades on NES, so we'll keep those going. Let's talk about a few stocks that we have in the investing account. So we look at the Lazy Trader account, which is our investing account, where we primarily are selling naked puts, leaps. So we're typically selling leaps. We might buy some leaps as a poor man's covered call opportunity, but we're selling leaps. We're also selling some naked puts in order to potentially get assigned and wheel high quality stocks or ETFs. The stocks that we have are Chipotle, Google, Meta, Nvidia. Okay. Those are our primary stocks right now in here. And then we have a few trades on MicroStrategy and SMCI because I thought we had good setups on those to trade. We also have ETFs in here. We've got leaps on SPY, leaps on VOO, leaps on TLT, and leaps on IWM as well. So We were in the ETFs. We'll keep adding to those as a basis for our account. All of that stuff is in really, really, really good shape. So I'm pretty happy with where we are. Really good gains. But let's take a look at some of these stocks. Meta has been on an absolute tear, moving itself to the upside, well above the Bollinger Band today, hit the 3 ATR, pulled back a bit, but again, new highs on Meta. We're in Meta trades up 35% in just 7 days. We are also in Google. Google, again, just a nice consolidation in this symmetrical triangle that you can see here, but bullish potential momentum on the weekly, definitely some bullish reversal and potential here on the daily. So if we're going to break, I'm guessing it's to the upside, but we are in Google and we're up on the Google leaps as well. We sold, I'm sorry, naked puts, we sold the 140s on Google. Nvidia just sideways trending, which is a beautiful thing. We were in this nice value area. We're dead center of the value area. The weekly looks a little bit overdone, but starting to pull back. The daily is a little bit stronger, kind of a yin and yang going on with these two, while it just stays in this nice consolidation zone. We'll wait to see if it breaks up or down, but right now, I think it's pretty fairly valued. And if we get any kind of a move towards the bottom of the Bollinger Band on which is 134 on the daily, or the 21-day moving average, which is 128 on the weekly, anywhere in that 128 to 134 level, anything in around 130, I'm going to be adding more trades to NVIDIA here. Now, we're sitting on naked puts in NVIDIA. Those are up 64%. We've got another naked put up 69%. We've got a poor man's, oh, I'm sorry. And we've got a Jade Lizard up 63% on there, and then more naked puts at 36%. So good shape on NVIDIA with those trades. We are not in Tesla. Tesla is on fire, moving higher. It's too extended. No opportunity to get into Tesla here. We'll wait. If we don't get in, we don't get in. We have plenty of other trades out there. I'd love to see a pullback in this thing, but it's a little bit overdone from a technical standpoint. Fundamentals, I still think are good. I think this is $1,000 stock by the end of next year or the next 2 years. So I really like Tesla. I'm just not willing to pay the price to get in right here. Palantir, again, it's another one that's just bananas off the charts to the upside. Like I said, if you're in it, congratulations. There's no way I'm playing this here. It is so overdone. From a technical standpoint, above its 3 ATR, above its Bollinger Bands on both the daily, it is so overextended. And the value on Palantir is in probably the 30 range. So this is selling right now for over 2.5 times its value. It's crazy. It's bananas. The PE is bananas. If you're in it, congrats. Like I said, there's just no way to play this here. I think you're crazy to get in, but you can always trade your way through it as well. CRM, nice pump after earnings, nice move up, consolidating a little bit here. Nothing to do on that. And let's take a look at a couple stocks here. Number one, SoFi. This move down on SoFi today was interesting. Recovered well off of its lows. I'd like to see SoFi come down a little bit more, maybe to the 21-day moving average, which it tried to get to today and it bounced off of, or at least something. It's above its Bollinger Bands. It's above its 3 ATR. Again, just like Palantir, it's too far gone for me. I want to pull back. If we can get one into the mid-teens here, or the low teens, like 12, 13, something like that, I think we'll look at getting into here with maybe a poor man's covered call or something to wheel that company. I think that's a decent company. I just haven't loved the stock. It's been a crappy stock for a couple years. All right, MicroStrategy. So we play a lot of MicroStrategy. I've got naked puts in here that are up 60, 70%, and I have another one up 57%. We also started a poor man's covered call in MicroStrategy. We bought the 200s. Okay, that's up 10%. And then we sold the 390s. We closed at 395 today. So those are down just fractionally. Overall, we are up 8% in 3 days. 8% in 3 days on the MicroStrategy trade, and we'll keep trading this thing. So we've got 7 days left on the covered calls. We'll see where those go. If we need to, we'll roll out, we'll roll up. Uh, we almost bought the stock at 400 today and sold the 400 calls just to pocket 400 bucks. I'm glad I didn't. We closed below 400 at 395. But there's some zero DTE juice and some things you could be looking at on here. Obviously, there's some risk to it, but there's different plays on MicroStrategy. But I think what's really interesting is we know on the weekly, this thing is just overly done. Okay? It's rocketed up. It's well past where Bitcoin is. It's 3x, Bitcoin as far as leverage and such goes. It's overdone. I know it is, but I'm playing a volatility play here, and we've been making thousands and thousands of dollars on this thing. We have made somewhere in the neighborhood of $10,000 to $12,000 in the last 30 days alone on this. So we play it as a trade, not as an investment. Okay, this is a shorter term trade. You're overbought on the weekly here, but look at the daily. Look at the stochastic momentum. It is down in oversold territory and maybe starting to curl up. Okay, you've had this big sell-off, some consolidation here. Okay. This thing's getting really interesting in here for another play. So I will be looking at some other ways to play MicroStrategy. We're going to keep trading it, not investing in it. Okay? It's not an investable asset, even though I am super bullish on Bitcoin. And I wouldn't mind assignment down in the 180 to 200 range, which is where I peg the value of this thing to be. And right now we're up at 2x where I believe the value is. So if you watch my naked puts and you're in the Discord, I'm giving you guys what I'm doing, but I don't own anything over 200. I'm at 165, 180, 200, 200. Okay, that's where I'm playing. That's where I feel the value of this thing is. I think maybe we get some pullback here. The weekly looks to potentially be getting tired, okay? And maybe it's going to start to head into the Bitcoin range. But Bitcoin, okay, it did dip below 100,000 today, but then it moved back up. So bounced off the 13-day moving average. Bitcoin, strong, looks good. It's a little overdone. I wouldn't mind a little bit of a pullback here. That'll help our MicroStrategy out. And then if you can't do MicroStrategy because it's too big, I really would look at Mara. Okay? Not the same type of chart, which I think is a good thing. Okay? 28, some resistance in this level. In here, it's hard to peg some of this resistance, but I think right around this 30 level where we nailed and fell back. But I think structurally, this thing doesn't look bad. If we continue to consolidate here, I think Mara is an opportunity for you to get in. And then we did a poor man's covered call in silver. I already talked about it with the futures. So something to look at for next week. But I just thought it was interesting that my stocks that are stochastic momentum basically an oversold category, you're looking at 5 stocks. Autodesk could be an opportunity right here. Baba, I think, could be an opportunity to get into the low or put credit spreads. Becton Dickinson, great company, down at the lows here. I think this is also a potential opportunity to get in. MicroStrategy, which just surprised me that it was oversold on the daily, on the stochastic momentum. And then you've got Micron Technology, which is down there and starting to reverse and come out. So some of the key stocks there. And if you're looking at Lilly on the weekly, this thing is also oversold a bit on the weekly, so we'll keep an eye on it. I also think you need to keep an eye on this particular level. I think this is what we got to get back to, somewhere around 860. It was a support. We broke it. It became resistance. Couldn't break it. So now we're going to come back to it. Sorry, one more time. All right, take a quick look at the accounts, and we'll wrap it up for you today. All right, so I gave you a couple trades that we did. We also rolled our covered calls on TMF. So we've got TMF in the investing account. We rolled those out today. And in the main trading account, like I said, we entered a silver futures strangle. So all of these things are in good shape. And then here's where we are. We finished the week up 21,000 to 528 for the week. Big week for us. One of the best weeks trading of all time. For us, nice gain on the net licks. And then if we take a look at the investing account, that account has gained over $11,000 in net lick, up almost 3,000 here. All right. Hope this was helpful to you. Have a great weekend, folks. We'll catch you later. Take care. Bye bye.